Hello everyone, today is September 7th and this is wyckoff Trading course, the practicum. Good to see you, all of you guys. We've got so many alumni in this class. It's unbelievable. So it's kind of like a testament to the work that all of us do here in this class. So I just wanted to acknowledge that, and those of you who are taking this for, second, third, and some of you even, 5+ times. There is something to practice, there is something to skill. We'll talk about this today, through this, 2 chapters on 10,000 hours and the qualitative ways. So we'll go through that. But I just want to say, I was checking my feelings before the semester started, and I was really excited. So it's a really good sign always for me at the beginning of the semester when I feel excited about the classes. So I can't wait to work. So today we're going to do exactly that. I have the first bias game for you guys. As usual, everything that we are going through here is just for educational purposes. Stop your recording and read the disclaimer in full. Today, as usual, market update, some Q&As that you guys sent. So in this class, for those of you who are WTC 1 students, you could send the questions, preferably, obviously, about the material that we go through, but it doesn't have to be. So this is like our way of communicating and talking about different things. Sometimes a student's question become a big topic and then becomes a part of the course in terms of the content and the material. So it's valuable for me to see what kind of questions you have. We're going to talk about that quantitative versus qualitative practices. It's important to us to establish this intention. Then, anatomy of the trade. We'll talk about this assignment. Some of you already started doing this. That's great. We'll have 2 exercises on price and volume. This is usually the way how I start practicum, in terms of exercises when we are, after the first session. It kind of establishes that relationship between the price and volume, makes you start thinking about, how deep you need to think about this, and just very useful exercise. So what's not here is the bias game. So we'll definitely talk about the bias game today as well. All right, let's do the market update. So very interesting price action, kind of everywhere, not necessarily just in Bitcoin. So let's not give any preference and just start as usual with the markets. So we're seeing definitely some weakness, especially in the Dow. And we just said that the Dow was weaker before. So the expectation is that if the weakness occurs, we're going to have somewhat of a more considerable move than, let's say, like in other indices. And it seems to me that this lower high is kind of suggestive that if there is a distribution of some kind of local distribution, I'm not talking about like a big distribution, but local distribution. If that happens, it's all in this area, right? So it's always, it's going to be in this volume and then in this volume as the continuation. I would say that for now, the second reaction in the Dow does not have necessarily the same type of spread expansion. But we could also say that initially right here, demand came in right away. We don't see the demand right here today too much. So I still would be expecting short term, an attempt to go below this support right here, this second bar off the bottom. Okay, so that's the weakest. Russell has been testing this big bar for a while, right? So how many days? 1, 2, 3, 4, 5, 6. We're into the 7th day. The more it kind of stays this way, the more I'm thinking, should we have some kind of spring right here, like this, something like this, but still within the body of this bar. So I think that this could be the kind of like the biggest bearish a long-term bullish scenario where the bullish scenario is still on, and yet short-term we might have some kind of weakness. Obviously, the preference is just, go up from here, and that's it. S&P is also very interesting because when we go to the hourly chart, and everybody, let's say on social media is posting the charts to me of S&P and this look, right? So in the question, is this a sign of weakness or is it a spring? So for now, we have to assume that this is an attempt to spring, and this is, slightly low potential spring. The spring would be only confirmed if we have some kind of commitment above this intermediate high. We also need to intrude into the body of this capitulation bar. So the higher we break out, the better the result of that breakout, covering the majority of this bar, the better it is for the bullish case. And obviously, I mean, the bearish case is just inability to do so, right? So we're intruding, let's say, into this bar, creating lower high, and then failing. So is this a sign of weakness or is this a spring? I think it depends on the resolution. And I know that this is not a concrete answer that you might be expecting from me, but I don't necessarily know, what, is exactly is going to happen here. I don't see a huge edge here on either side. So in this type of the situations, I always try to, like when you are not sure about your analysis, then try to figure out the commitment levels. So here is definitely one commitment level. It's this resistance right here. And here is another one to the downside. So whatever is going to happen is going to happen. So we just need to wait and see if there's some kind of doubt. But what I really like in today's day is NASDAQ. I mean, on the background of the Dow going down significantly, Russell retreating, S&P also having kind of like a day of vulnerability, NASDAQ was kind of like outshining, outperformer, holding and actually advancing just a little bit. And this is the highest close here. So, and we still could have some kind of distributional even structure on a lower time frame. So let's say, like, let's go to 60. And, this is a much stronger look. Why? Because NASDAQ is stronger by itself, right? So, but it doesn't mean that we can't break this low right here, especially after, so let's say this lower high failure. So we need to see decreased volatility in this area, and then the break to the upside for the bearish, for the bullish scenario. And for the bearish scenario, after the lower high, just to come back here and consolidate a little bit and then break to the downside. And that would be your sign of weakness and last point of supply. But the question is, if we are going to have a reaction here, what kind of magnitude of the reaction we might have? Well, NASDAQ is the strongest, so we probably would be thinking something around into this area, something like this, and then still probably bullish. I just don't see any distributional signs. There are no like volume increases that are disturbing. There are no big price structural damage. But there is definitely some deterioration in the way how the uptrend is going, right? So overextension about the break, less so, less so, less so. So we're seeing how momentum is diminishing, and that kind of becomes more of the vulnerable spot. So I think that the problem, or like the challenge of this could be in something that looks like this. Where we don't necessarily see a lot of distributional signs, right? So here it is probably more visible just because of the volume signature. But let's say something like this, right? And you kind of observing this deterioration here of the momentum. shortening of the thrust, and so on and so forth. So, and then a sudden reaction comes. Here, there is a little bit of the distributional top, but really, really small. But the volume signature would give it up. But something, let's say if we don't see the volume signature, something like this, where we just pause and then suddenly we go down. Something in the way of what has been happening with Bitcoin, right? Where today we had quite a significant, one of the most significant spreads after probably the climactic action itself, a couple of other big spreads in the trading range. And then this was probably what, the fourth or like the third? No, even maybe the second. We've had those before, right? So for instance, this, and this. So those are the biggest spreads, downward spreads. Almost every time there was some kind of recovery, and we could a little bit analog as to what kind of response we might have. First of all, it seems like the test is always to the downside, right? So we still would be expecting some kind of pressure to see that testing. Okay, well, maybe here, not here. This is just different context. So we'll have to see what's going to happen here. Are we going to stop here and then try to rally from here? Or are we going to do the same thing as we've done before, let's say somewhere here, where we just scrolling down this way, and then we are reacting up? So we'll have to see. We're still within the confines of the uptrend, I believe. I believe that this is the line, this is the channel right here. So we came to the support, which also was a logical support cluster right here based on the resistance, based on the support, and we reacted off it on the volume spike. So, so far, we can't say that we broke a long-term uptrend. We broke an upswing for sure, but not necessarily a whole uptrend. So testing right now is the most important thing, right? So how are we going to test? So preferably something like this, where we just lose in volatility and yet creeping back up and then continuing to the upside, something like this. Then we would be thinking that this was a shakeout type of action, maybe even combine this whole area right here into a trading range. That would be extremely bullish. The bearish scenario obviously is just break of the trend. So we just have to be aware of that as well and see if it happens. Okay, what else? Okay, yeah, did we finish here? Yeah, this type of shakeouts, those are the nasty ones because they basically happen in a matter of days. And this is probably the most difficult call as well. You know, just to call, in a way, this is calling an intraday structure to fall as if this is a daily swing. Well, let's see how that's going to happen and how that's going to unfold as well. If we have some kind of stupid decline here, it should go through this area right here and should violate this as well. So something like really fast and then into a trading range. So that's probably the most bearish scenario that I'm seeing right now. There's really nothing else that is kind of like super aggressively bearish. It just, demand is not necessarily as strong as before, and that creates the vulnerability for the market, you know, to react in some way. and probably we're reacting again more on a rotational basis. I'm really liking how gold is starting to underperform silver. So here's the gold chart. We actually, we've talked about this level right here. My preference would have been, and I said this on Monday, if this bar that happened yesterday would overcome slightly that and then come back into the trading range. But yeah, we were saying that one way or another, the price needs to come back here and start to retesting. But what's nice is about gold is actually silver. So silver has been in a very long-term consolidation going into COVID low, major sign of strength and major backing up action. So now into this trading range. What are we seeing here? So change of character, phase B, typical rallies with big reactions, supply at the top, also very typical for phase B. I'm not sure what we were calling here. I think we were bullish at this point, but it didn't materialize. And then break, and look how the volume is diminishing. And we are trying to sprint here, demand tail, consolidation, multiple tests. And we've called it last week in WMD somewhere here that we're probably going up in silver. And yesterday's bar was great. The significant bar. Look how cleanly it breaks to the upside and extends above the breakout, so which is a great character for the breakout. Also intrudes into this bar as well. And what I really like today, when you look at silver, which hopefully is in phase D, and you compare it to gold, you see how this bar is holding on silver, and this is more of the inside day today. On the increased volume signature, which suggests that supply is increasing, demand is increasing at the same time. So effort versus result, demand is holding. So if silver will start outperform gold, we're going to go into a rally mode, because usually that's when silver outperforms gold. So a very interesting development in silver. Okay, so what else? Oil is kind of like not here, not there. I think that's it for today. Yeah. Okay. Yeah, we've got a lot of exercises today, so let's just jump. All right, so this is the homework. How did you guys like? How did you guys like it? Did you read it? Did you have a chance to read it? Yeah, great reads. Okay, Joe was saying great reads. Yeah. I definitely could see both points. And usually here I kind of have the exercise with one of you. I invite somebody to share how many hours um, they spend on trading. But last semester, Johan, one of the students in our practicum class, he created such a great slide that I'm just going to use that. Let me see if maybe accidentally he's here. No. Okay. Let me just give you a little bit of my perspective, and you guys could write your comments, and I'll definitely read some of them. Alistair is saying they seem to contradict each other, and I would agree with that. Yeah, there is a little bit of the contradiction. One article, which is 10 hours, which is basically a chapter from Outliers, is stating that you need to spend a certain number of hours in order for you to acquire mastery. So I think that in a lot of ways, this message has been a little bit misinterpreted. So the way how I interpret what Malcolm Gladwell was saying based on the facts of like super successful people is that not only you would have to spend those 10,000 hours working on your craft, but it is by default a suggestion that as you're going to go through this 10,000 hours, you will be on the mission of perfecting your craft, meaning that you will do everything correctly. And I think that's what was meant by the default there by him. Maybe not. Maybe that's just how I'm translating this. But if that's not the point that the first article brings to us, then the second one definitely reiterates the importance of the qualitative practice. So if we are practicing, you want to be immersed in that practice, and you want to do everything correctly by the rules, by the standards that you've set up for yourself, or somebody else set those standards for you. And then this seems to be advancing your craft at a much faster rate. And obviously, when we think about how many years we should be spending on this craft, I mean, 10 years, it seems to be like something that is like a given. You have to, for at least 10 years, each year, educate yourself, create, systems, create processes, do a lot of simulations, do a lot of analysis, do a lot of trading. And throughout that consistent practice, where you optimize each practice, where you understand the purpose of each, and where you are, most efficiently doing that practice, that would advance you really fast. And obviously, anything beyond 10 years is even better. So the reason why I'm giving you this reads, guys, is just to set out the intention for the whole semester, that this is how we're going to approach this. We're going to do a lot, and we're also going to do it in a very qualitative way. So hopefully that resonates with you. Hopefully during your homeworks you will think about this and you will produce your best work. I most definitely want your best work, each week for the duration of this semester. Push yourself a little bit further than you have gone before, let's say in WTC 1, and do that homework each week. Be consistent about that and be good about that. Just, apply the best of your, knowledge and skill, to the homework. It will help you. Okay, sounds great. Let's do this. Let's go to this slide. This is from Johan. So he was a student in the previous semester, and this is what he's created based on our discussion of those two reads. And I'm not going to read all of this, but what he's done is he has created a table, and you are welcome to copy this. I have his permission from the previous class that you could use this. By the way, how's my audio? Joe is saying that he lost the audio. Can you guys hear me? Okay, internet. Okay, that's fine. Okay, so we've talked about different ways of advancing our craft. So different type of activities here. Johan is having here deliberate practice. So I'm assuming this is simulation, trade management, research, journaling, miscellaneous, and studies. And then what I thought was so brilliant by him is that if I kind of gave the students the thought about calculating how many hours you actually spend per each activity, Johan actually decided to have a multiplier for each activity, which would say that this activity is much more preferable than any other activity. So for instance, a deliberate practice is given a larger multiplier. And it makes a lot of sense to me that you, in this way with the multiplier, you control the number of hours I actually controlling the quality of your work, or maybe like the depth of the practice itself, if that makes sense. And then you just calculate. So each day, Monday, Tuesday, Wednesday, and so on and so forth, hours per week, hours per year. And for the year, this is what you get for the number of hours. And then you start thinking, okay, well, how many years it will take me at this pace with all of these activities to get to, let's say, 10,000 hours. So it seems here that this is going to be like 15 years or something like that. So when you start seeing this type of numbers, like 15 years, 20 years, you start thinking, wow, what am I doing this for, right? So most definitely, I would think about this because if you want to be really good, it's going to take some time, considerable time, and it's going to take like a very considerable effort to be focused on this. I'm really lucky myself because all of these classes with you guys, they focus me on staying on this path. So in that way, myself or any other teacher is benefiting the most from education. But you have to like make that conscious decision to go maybe create something like this. Please take this because this was given to everybody. Again, we're grateful to Ilhan for doing this for us. And then look at this. He has this levels to mastery, to break-even point in trading. So he defines it as 2,000 hours, 3.2 years, to the profitability. This is so important to understand this, right? So being at the break-even, then being profitable. Okay, I forgot this abbreviation, guys. Maybe you could help me out with this. Ooh. Quit your day job. Oh, Joe, thank you. Yeah, quit your day job. So 6,000 hours. So that's 10 years right there. And then mastery in 16 years. Yeah, so I mean, just was such a great approach to these two articles. So for sure, I wanted to bring this to your attention. Francis saying, okay, I've been studying wyckoff methodology for 5 years. Work hard at building my knowledge bank. I'm definitely seeing the results. I'm also seeing the road continues ahead and destination has not been reached. So yeah, and this comes from a student who has been with us for quite some time, who has become a contributor, who is a teacher now at the process group, and also Francis involved with the anatomy of the trade. So, and I definitely can concur that I'm seeing the results, in France in terms of how the selection started to work and how the trading started to work. Okay, so do that. This is not a homework. This is something that you take on your own, okay? Mohammed, yeah, I would agree with that. So take this and do this on your own. We'll have some other homeworks. Now let's talk about the anatomy of the trade. At the beginning of the class, in the first session, I mentioned that this is what we're going to do. But I didn't go into the details. So here are the details. This is a homework. So again, each class, I want you to submit this trade. So I want you to submit as a homework, one of your trades. It doesn't really matter which trade you choose. It could be the trade from this year, from last year. It could be stocks, it could be futures, it could be intraday, it could be daily chart. It doesn't really matter. But what I really would like to look at, and specifically for you to look at, is the number of trades throughout the semester. So we're going to have 15 weeks. So now it's already like 13 weeks. So I want you to look through 12 trades of yours. And I want you to look at the trades that, let's divide them. Okay. So your homework is going to be, I want you to look 50% of the trades that were winning trades and 50% of trades that were losses. All right. And when we're going to talk about this, I want to talk about your largest losses and I want to talk about your largest wins. Okay. So the intention here is going to be dual then. The first intention is going to be, let's look at our largest, biggest losses, and let's figure out why did we produce that. We're going to look for the commonality of the mistakes that you are making in those largest losses. With the wins, the question is no different. Why did this trade produce the largest win for you? So, and that's why we're going to have this duality in this homework. All right. So what do I want to see there? I want you to send me the chart with the point of entry, stop loss, any add-ons or trims that you had for this position, and then with your exit. I want you to conduct your post-trade analysis. This table right here, I've developed this for the process group in 2019, but we definitely improved a lot with Franz coming on board for the Anatomy of the Trade series. And specifically, I believe the variance was added or something else. And also, together with Franz, we worked on the kind of like concept, the idea of the feedback loop that needs to go back into from your post analysis into your daily routine. So that was kind of like the innovation that came from working on both the trading process group and also the anatomy of the trade. So with your analysis, and here in your post analysis, what I want to see, did you identify the bias correctly? Yes or no? Was the timing correct? Yes or no? Was the character of the price movement defined correctly or not? Was the point of entry correct or not? Stop loss correct or not? Add-ons, if applicable, and then exit, yes or no. And then you calculate the variance. So the variance is basically, if you do everything correctly, this is 100%. And if you have any no's, is taken out of the 100 variance. And then go to comments and lessons and identify what is the common mistake or what are the mistakes that you've made there. Then think, and this is what now I'm remembering Franz. This is what Franz added, which was very valuable. What is the rule that you would extract from those comments and lessons? So I thought that was really great because we are, through this process, what we are doing is we are identifying the commonality of our mistakes or commonality of our successes, maybe even, right, on the other side. We become aware of them in the comments and lessons, and then we create some kind of new rule that we have to follow. So what do you guys think? Is this a good process for us? Want to push you in this direction so that you would start looking at your trades more and being in the habit of analyzing how you trade, right? So hopefully this semester, as we're doing this exercise, you will, get this into a habit. 4 months is enough period of time if you do this consistently, and you don't have to do this like each day. You don't have to do this with all of your trades. All I'm asking for, 1 trade per week for 13 weeks. That's it. And then you are off the hook. Will it still work for the campaign trade? Alistair, absolutely. So any type of trades, if your campaign trades are like years and years, then go maybe like 5 years into the past, right? And collect a number of those trades, like those 12 trades. Let's say 6 of them are losing trades and 6 of them winning trades. Is this all trades or new trades? Whatever they are, whether they are old or just recently implemented, the main idea is that they are done. So this is the trade where you actually produced an exit, where you closed it off, where you know exactly what has happened afterwards to make an assessment of how you analyzed and how you traded. So don't bring the trades that you're currently in, because we will never know what the exit would be. Okay, great. So, and then also we want to profile some of those trades on the anatomy of the trade video. So for those of you who don't mind, and we put no last names, we would say, okay, France, and that's it. But France and hopefully John and myself periodically, we will be creating those videos. If you don't want your work to be on those videos, just let us know. We'll absolutely respect that. Okay, and don't forget, this is every week, right? So not just one trade that you're gonna send us, but like each week I want to see the progression of your post-trade analysis. And by the way, for those of you who are not familiar with this work, come to our YouTube channel, Anatomy of the Trade, the series that we've been recording with Franz forever. You know, already has what, 89, 90 episodes? Wow. So just watch at least one, and you will right away know, you know, what's going on. Just don't watch the market updates because those are just, you know, kind of like extra sessions that we have there. Okay, let's jump to the next subject. Okay, so Q&A 335. Okay, good pace. From Amin. I determined the bias of this trading range correctly at the beginning. Point of entry was on the first green reversal bar. Okay, so here I resume. But the upthrust action at the resistance with large down bar changed my view on the trade and exited my position completely right here. This is what most of my trades look like. And by the way, most of my trades. So see already, Amin is indicating that he knows his common mistake. So this was most of my trades look like in late 2020 and early 2021 before I took WTC course. Hopefully I can tell the difference between the reversal and shakeout reaction going forward. I know why I wanted to show you the slides, because this is the anatomy of the trade slide. So Amin is discussing this trade, and this is exactly kind of like, one of the ways of doing this. So here is this post-trade analysis. Bias was correct, timing was correct, character was correct, point of entry correct, stop losses no, no add-ons, and exit no. So the variance was 67. Comments and lessons. I know the difference between to know the difference between shakeout and normal reaction. After the sign of strength rally, expect some kind of reaction. Very good observation. Point of exit could have been an add-on on the position. Okay, great, because mentally you have to think that you have to reverse your thinking there, and that's great that you're recognizing this and the rules. Okay, so is this supply? Supply, if the supply increases at the point of exit bar, but no commitment below last significant bar. And I was about to say that, yeah, I think that the key was there. What does this bar achieve relative to the last, let's say, two commitments to the upside? And it just stops prior to that. It stops in the body of that breakout. So I think this is absolutely correct assessment. Breakout bar commit well above, so bullish. Placement of my stop loss was made as correctly. This is a great example of the anatomy of the trade. And I mean, if you would like to share that with a larger audience, you know, let us know, and you know, Franz could make an episode out of this. This is beautifully done. I think that there is a really good level of self-assessment here as to what exactly has happened. And this is exactly, guys, what we want to do. I just want you to see your own mistakes. I want you to start looking at those, right? Not running away from them, not hiding from them, not withdrawing from the process of this analysis. We need to go into those uncomfortable places, and that's what's going to make us better. So let's kind of get to work. And I mean, thank you so much for sharing. Okay, bias game 340. Guys, is everything okay with the audio? I have a second comment here from Wilfredo. Your link is not playing correctly. The audio is cutting out of all the time. Is that okay? Okay. Maybe for those of you, because everybody is saying that everything's okay. So for those of you who maybe are experiencing some kind of audio problems, um, maybe that's the internet. Try logging off, logging back in. Sometimes that helps to kind of reload everything. So I don't know what else to do here. Okay, let's go to the bias game. So this is your next bias game. We're coming back. It took me some time, to get myself together a little bit after this break. So today I was looking at some of the charts for the bias game. So this is the first one that I really liked. So we're gonna talk about the bias game right now for some time. As usual, for those of you who remember how we did the bias game, I want to ask you, what do you see here? Do you see here a distribution or accumulation? So I'm gonna give you some time. Yes, I'm gonna give you the answer to this question. Yon Jun is asking, is this an IPO? Yes, so the IPO price was right here, and this was an IPO day. So I'm gonna give you maybe like half a minute to think about this, and then please write down the bias of what you think this is. And then we'll come back and we'll talk about how we should be analyzing this. All right, let's see the results. Okay. All right. I think we are most definitely inclining more to a certain bias. I will not going to tell you what the bias is. I mean, we're not going to go through this bias game today. What we're going to do is I'm going to give this bias game to you for as a home assignment for next week. I just wanted to see what kind of bias we have right now as a group. So your task is to analyze this in more details as a homework, to put your annotations, to put any questions if you have any questions. Usually the questions should come after we reveal the solution, which I will reveal next Tuesday. Now, this bias game is gonna be on Twitter next week. So our class will be 1 week ahead with all of the bias games. So obviously, guys, I don't want you to go on Twitter and comment on the bias when you will know that. All right. So let's just have this agreement between us. But I really like the idea that the class is going to be at least 1 week ahead. So for next week, do your homework, do your analysis, and I want you to do your analysis in a specific way. So for probably the last semesters, I was working with students on the sequence of how we would analyze a trading range, what we would start with, and then how would we develop our analysis so that we would develop almost like a practice, like this article about swimming, right? Where you have to make a turn or whatever it's called, and then have it a specific stroke, to do it in a specific way, and to do this in a specific sequence. So this is the sequence that in the last 4 semesters we've been improving on, and there are a couple of ideas here. So let's start with the first one. So this is the first sequence on how to evaluate the chart, specifically a trading range, and specifically the bias scheme. We want to define the environment or the background, right? So what comes prior to that? So for instance, if we have a trading range, what comes prior to that? Is this downtrend or is this an uptrend? And we want to understand the characteristics of that uptrend or the downtrend. Was the volume increasing or decreasing, momentum, shortening of the thrust, the slope? We want to, and this is a little bit too detailed, but I'm just going to kind of like, you can read this later. I'm going to talk about the big points here. So the background is, it will help you to identify, let's say if we're talking about the volume signature, it will help you to assess what the volume doing in the trading range, because you will have a point of reference of how in the non-threatening trending environment the volume behaved, and how the volume, let's say, is starting to behave in the trading range where volatility might increase. So we need to have that reference. We originally going to assume that if the prior trend was up, our initial bias will be a reaccumulation, and this is very important, to be confirmed or to fail. So in trading, the trading is always about uncertainty. So if anything that needs some kind of confirmation of that, it's Bitcoin today was just like a great example where you think that there is nothing threatening to the current uptrend, and then boom, something like this comes. So we never will know when those things will happen. And there is a great book on that by Mark Douglas. I think Trading in the Zone, guys, right? Is that the name of it? Where Mark, and he passed away, by the way, came to Golden Gate, gave a speech, gave all of our a student. I was a student at the time, like 25 years ago. He brought the draft of his book, Trading in the Zone, or something like that. So it was so cool. So you never know what's going to happen. So every time you need to seek confirmation of failures. That's why this phrase, to be confirmed or to fail, should be like the main phrase that we will be using in our analysis of the in the bias game. So it's an easier way to assume first that this is what it is, and then start negating it or start looking for the confirmation. So how do we actually seek that confirmation of failure? Through our first swing analysis and then through the bar by bar analysis. We want to look at all of the upswings and compare them to each other. We want to look at all of the downswings and compare them to each other. We want to compare upswings and downswings in kind of like the timeline of the wyckoff story as we go through the bias game. We also want to look at the bar by bar from multiple points. Excuse me. We want to understand the latest price action in the trading range. So, for instance, could we interpret this action bar by bar? Why is this important? We want to understand the short-term direction or the short-term bias of the next swing. And if it's, let's say in this case, up, and we're seeing all of the bullish characteristics of, let's say, reaccumulation right here, then this helps us to confirm the whole bias that we're seeing right here. Secondly, we want also to identify specific analog bars throughout the trading range structure, and we want to make assessment of how behavior changes as we go from left to right. Then the next task for us is to define the bias. So based on all of the analysis that we went through, the background, the swing analysis of the rallies and of the reactions, and then bar by bar analysis, what is the bias? So this is where we're remaking our decision. So please note how different this process is from just looking at the chart and thinking about whether this is the distribution or accumulation. This process does not allow you to make that determination until you actually go through the observation and deduction process. So you have to make observations. You have to deduce what they mean and then make that determination for the bias. Only after that, we will go and do labeling. Please note how different this is from WTC 1 course, where we actually start everything with the price structural analysis, right? So a completely different approach. But the key here is that we want, before we define the bias, we have to go through the process of how we are analyzing. And analysis, again, is going to be your observations and your deductions about what those observations mean. All right, any questions on this process? Okay, yes, I skipped those questions, Alex. Thank you. I'll come back to those. Where are the significant bars? Yeah, the significant bars are going to be here under the analog bars. Significant bars, are we closing above or below? Yeah, those are going to be, I'll show you as we go through the bias game how we will be defining, those significant bars and analog bars, and they will create specific sell and buy-in zones, and we will be looking at how the price interacts with those zones. So yeah, we'll definitely do that. What are significant bars? Okay, Stephen is asking, what are the significant bars? Yeah, that is coming also in a big way. We're gonna spend a lot of, I'm gonna lecture on that, and we're gonna practice a lot, probably starting with, in a couple of sessions, we're gonna start that. Okay, anything else? No? Okay, so let's go to the next idea. The next idea of the analysis, which also was kind of originated from one of the classes here in the practicum course. This is, the flashcard is almost like a bullet point, one bullet point that gives you some kind of definition of the bias. It could be that significant bar, let's say we have some kind of significant bar to the downside, and the price was trying to overcome it and it failed after the lower high, and then there is a failure. So we're saying that the bias is to the downside. This could be that one flashcard idea. For now, I'm not going to necessarily tell you more. Just develop it on your own. If you see that one idea, you could say, this is my flashcard idea. You could have 3 flashcard ideas or multiple. It doesn't really matter. I mean, students are always so creative, either with this analysis or with the flashcards. And then it becomes kind of like the practice that we go through becomes a habit. And this is exactly where I want you to be at the end of the semester. I want you to take this sequence of the analysis, and I think I need to reduce a couple of things here because, I think I need to define this in a more simplistic way. So I'll work on this, guys. And then I'll also work on the description of the flashcards. But for now, just take it, as is, and create something of your own, and we'll just go from there. I want you also to do your post-analysis of the incorrect bias games that you've done. And for that, you will have to keep your bias game score. So you basically have 2 columns. That's all I want from you. Wins and losses. And then the total. Right? So something simplistic as this. I want to see where you are, and I want you to see where you are. So we will become aware of how good we are in our analysis. After that, all of the losses that you had in your bias game, I want you to post-analyze. And this post-analysis is not the same as for the anatomy of the trade. What I would like you to do is on the chart just to point to the specific spots where you were on, and just in like a couple of sentences say to yourself what was wrong there. I want you to become aware of those mistakes. So both of the exercises, anatomy of the trade and the bias game with its post-analysis feature, usually will start giving you an opportunity to correct yourself, to see your mistakes and then to start correcting those. So again, this should become very habitual throughout this semester, that you develop this skill. So don't forget, yeah, we're in the practicum, so you'll have to do a lot of those type of exercises. Okay, any other questions on the bias game? Qualitative work, Francis saying. Yes, absolutely. So we got to do that qualitative work. It's very tedious, but this is how you guys are going to improve. Okay, well, let's jump to the next question from Maria Null. So apologies if I am mispronouncing. I'm sure I'm mispronouncing. Okay, so my question from the second chart, that maximum portion is a bullish bias. I only find bearish is diminishing upthrust. Okay, so we're only recognizing the diminishing upthrust right here. Okay, with the weak rallies. Okay, my question is, which section do I give more weight because of the bullish bias and last leg reaction, maybe second point of fear in the spring? Okay, result is the distribution. Yeah, when I looked at the chart, the first thing that I've noticed, because I was looking at the chart first and I was looking at the bullish bias, what caught my attention really quickly was this bar. This was kind of like a very interesting bar in itself. It definitely springs the support, and then there is no continuation to the upside. So a sprint usually will have some kind of, test and then continuation to the upside. Here we don't see this. So we see a failure right here. And that right away kind of spooked me a little bit. And I was thinking that this is a distribution. And then obviously this whole area right here, and that's why we're looking at the bar by bar analysis of the latest price action in the trading range for the bias games. What do you see here, guys? How are the rallies? What is the strength of the rallies? And we're kind of seeing that the rally cannot overcome sort of specific selling points, specific breakdown points. We are stopping here, so the rallies are still weak. So I thought that this was a tell, which was quite easy to identify. Having said this, I think that the idea of the bearish bias maybe could come potentially a little bit earlier. And I wouldn't say that it's easy here to define that. I think it's all in what you've defined correctly as a diminishing upthrust action, right? So every time we come to the specific price level, then we cannot reach it. We can't reach it. And I would say that this last upthrust right here is more telling than the previous ones, because the previous ones are still going down, and you could argue that there is some kind of apex formation right here that could still resolve itself to the upside. But this upthrust right here, This is of a different kind. It actually overcomes the previous high, which was never done, right? So we, well, maybe here a little bit, right? But nowhere else. So at this point of time, you have an expansion of the upward result into upthrust, then instant failure of that upthrust. And that happens also on the emerging upward effort. Like there is so much effort there to push the price up. And what does it do? It only overcomes the previous intermediate high by a little bit. Upthrusts, and then right away supply is coming in. So I think that just the observation of the condition diminishing upthrust action, right? So it's not expanding into the higher resistance was a really good observation. This failure of the upthrust probably should give you some kind of indication of the bearishness, and the bias would confirm that bias. This failure of the sprint most definitely should act as a confirmation as well. And then this weaker rally area most definitely acts as already like maybe the third confirmation. So I would approach it like this. Okay, let's jump to our first exercise. All right, great. Okay, so this exercise is one of the favorite exercise, for students and myself. The task is to look at the volume signature that comes after the break in price and construct the price action. So literally construct the structure of what you think the price is doing based on the volume. And I would like to ask a volunteer to step up and say yes, and we'll do this together. So you'll be analyzing the volume signature, and we'll think about what does this volume signature represents and how does that, or how it should translate into the price action. Okay, well, let's go to Tarek. Okay. Hi, Tarek, are you there? You are muted, so unmute yourself.
Hello?
Yes, here we go. I can hear you now.
Hi, how are you?
Yeah, I'm doing okay. Tarek, am I pronouncing your name correctly?
That's really good pronouncing, yes.
Okay, yeah, because I remember from the last semester. I think that's what you said, Tarek. Okay, great. Okay, so before we go into what is unknown, why don't we look at what is known and what is given to us, right? So in other words, why don't we look at the prior price and volume action? So what kind of environment do we see?
I think we are seeing high volatile market.
Okay, specifically where?
With the downswing.
Okay, so the first downswing, let's just call this a downtrend because it is, right? So lower high, lower low, lower low. Okay, so volatility is very high here. What else could we observe about this area?
We are seeing some stopping action and the starting of upswing.
Okay, so sell-in climax, automatic
Yes.
rally, some test.
Small.
So how would we label this, I wonder?
I think this is a shakeout type action.
Okay, well, it actually goes below the support just a little bit. So whenever we have this type of marginal temporary commitment below the support and instant recovery, I would probably be thinking that this is a spring rather than a shakeout. The shakeout will have the character where you have multiple progressive closes down, and then there is some kind of overextension to the downside below the support.
Here we have.
Sprint.
Then
let me ask you this question. So sprint in which phase?
phase C.
Phase C. Okay, so right away I'm going to ask you after that two questions. The first one, what is the next rally? How would we label that?
This one is sign of strength.
Sign of strength, and then the reaction?
Back and up action.
Back and up action. Okay, great. So this is the conclusion of the whole accumulation. So two questions come from that. Why is the trading range so small where the phase B is just almost non-existent?
This could be like a V-shaped recovery.
Yes. So remember the TP formation, right? In the TP formation, what's the rationale? There is a speculation on the way up, and then there is an urgent selling on the way down. So the opposite of that will be the V bottom recovery, a la COVID-19 type of the recovery, where we have capitulation on the way down and then urgent buying on the way up. And usually that will create some kind of extreme oversold condition. And because of this extreme oversold condition, there is a very much extreme value for long-term investors. So what they do is they have a rapid accumulation. And because of this rapid accumulation, phase B is very short. So they just don't have time to accumulate enough shares and in a very prolonged period of time. They have to do this very quickly. So as they accumulate, the price starts to run away from them. So they keep accumulating on the way up. So usually you would have two segments here. You're going to have that extreme oversold condition after the downtrend with rapid accumulation, and then you're going to have accumulation on the way up. We see that from the volume signature. Where does the volume signature starts to go down? This is where they stop accumulating. But before that, everything before that was two types of accumulation. One through a rapid accumulation trading range right here, and one on the way up. Okay, so what could we say about this rally relative to the previous two?
I think we are seeing some kind of climactic run.
Okay, which is very interesting. What is the character of this climactic run?
High momentum, low reaction.
Definitely low reactions. I wouldn't say extremely high momentum, because the high momentum on the upside probably would look something like this, where the upward spread is just increasing a lot, right? Here, the upward spread is increasing just on the takeoff right here. Everything else is smaller. So I would say that momentum is actually decreasing on the way up. But it definitely still is the climactic run, because we know what came afterwards. We know that supply came in, and this is what, Tarek? Label this whole reaction.
Automatic reaction.
Automatic reaction, or a change of behavior type of reaction, right? So this is the largest reaction down in the context of the up move. So most definitive change of behavior. Okay, I am not sure if this is visible. There is an up bar right here. Yeah, such a squeezed chart a little bit. Okay. Okay, well, so we had a downtrend, we had an accumulation, we had a rally, and then we had a change of behavior. Tarek, what do you think the bias is for the rest of the chart?
Reaccumulation.
Okay, and
To
why
be
would you think so?
because of the extension of the downward distribution phase was limited, and the urgent buying was so hard at close level, and it comes after reaccumulation.
Okay, are you talking about this bar right here? Did you say that the
No,
buying is coming in here?
no. I'm talking about the down distribution range was too
Okay.
small.
Oh, you
Then
mean
all
this one, or this one?
no, the previous date. Yes, this one, the first one.
This one? Okay. Well, we don't know what was before there. I mean, there might have been more of the trading range. I cannot tell you. So we only look
Okay.
at the data of what we're seeing here. This is more of the redistribution trading range.
Okay.
Mm-hmm.
Okay. For me, it's reaccumulation because of the structure. Previous trading range was accumulation actually.
Mm-hmm. Okay. How about this? I'm gonna ask everybody, guys. What do you think? Is this a reaccumulation or maybe a redistribution or a distribution? Kind of hard to say here. Is there a stop in action? Yes. We are currently right here, so we stop for now there. Okay. All right. Okay. Well, why don't we start with this? What is the environment here? What kind of environment are we in? What do you think, Tarek? And you
I
guys,
think
as I'm asking questions, yes, please answer so that I would see your answers too. Okay, Tarek.
I
Yeah.
think this is non-trending environment.
Non-trading, so trading range. So then we have to think about, okay, what potential bias we might have here. And then through the volume signature, we want to confirm or we want to see that this bias will fail. So we've had a downtrend, we had an accumulation, we had accumulation on the way up, then they stopped buying, momentum diminished, but was there an aggressive selling? Probably not. I mean, the most aggressive volume bars that we see and the bars to the downside are this, and this. So prior to that, from this area to this one, this is just no buying. But at the same time, this is also no selling. So they started selling only here into the potential climactic run. So I would say that the previous bias was an uptrend. Now we're going into a trading range, and we're going to assume initially that this is a reaccumulation. And we're going to try to figure out whether in the volume signature we could see some kind of indication that indeed this is a reaccumulation rather than some kind of distribution. Okay, well, if we're thinking, Tarek, that this is a reaccumulation, through the volume signature, from column number 1 to column number 23, could the volume signature tell us whether we could say that this was a reaccumulation or a distribution? Is there any information there?
I think there is definite supply came in. and subside. Either it's in the up range or in the down range.
Okay. Well, what do you think about the overall volume signature and specifically of supply? So for instance, here, and I'm only showing here the
Yeah.
supply volume spikes. Generally, what's the trend here for the volume or for the supply?
Diminishing supply.
Yeah, I would say so. So we're seeing diminishing supply. Does this confirm or negate our initial reaccumulation bias?
It's confirmed reaccumulation.
Yes. So with this idea now, we're going to be thinking that we're looking at the trading range. We are looking at the potential reaccumulation trading range. Okay. Is there any specific volume signature that you're seeing from 1 to 23 that you would say that by the volume signature, I probably could see that this is this price action or another?
I believe bar number 5.
Okay. This one?
This is the highest volume comes in.
Mm-hmm.
That could be after that. From bar number 1 till 5, there is diminishing volume signature.
Mm-hmm.
So I'm expecting there was an up swing rally.
Okay, yeah, and we could see that from the volume signature, right? So for instance, we see how it's a little bit mixed here. Then we're seeing reaction. Then we're seeing more of the rally. Reaction again. Rally. Reaction. Rally again. And so on and so forth. So we kind of could extract the structure of how the price, what the price is doing. So at least, on the some kind of reactions and rally modes. Okay, so if this is a climactic action, what are we expecting here, Tarek? First.
Automatic
Mm-hmm.
reaction, a secondary test now.
Automatic rally first, right?
Yeah.
So where would it
Rally.
go? Where do you think that it might actually travel?
Till the preliminary support here.
Well, we need to, I mean, the rally is going to travel up and it's going to encounter some supply at some point of the resistance, right? So I would be probably thinking maybe like this cluster right here. This would be the first attempt to rally. We have a couple of first bars as tests to the downside, then one bar to the upside, to the downside, then a couple of bars like this. So I'm thinking, okay, well, maybe this. Then we go into some kind of reaction mode. What would that be after the first potential automatic rally?
A secondary test.
Yeah, so some kind of secondary test, which is local secondary test. Please note that the volume signature is diminishing, so it was probably a high-low secondary test. Okay, so what do we do next?
Entering some testing.
We test it on the secondary test here in column number 2,
Then,
and then look at this rally, small reaction rally. So maybe something like, go ahead.
going back to the automatic reaction again.
Okay.
With the little bit, I think there is a little bit more effort. Maybe we uptrust there.
Yeah, maybe we overcome this high right here at 3. Okay, and then once we do, and we probably would be thinking about just intruding into this bar right here. Okay, and then we
There,
go into the reaction,
yeah.
which ends with the climactic volume signature. So how would that look?
there will be a very high spread bar
Mm-hmm.
to the
Okay.
downside.
To the downside. Okay, so first down, 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 and then some kind of bar to the
Connection.
downside. Okay, I'll take that. All right, and then,
Then
uh-huh.
then rallying in low volume suggest a weaker
Weaker
rally,
rally. Yeah, I would agree with that. Some kind of weaker rally, and then after that,
and that big spread
mhm.
capitulation bar.
Yeah, and I wonder if this bar maybe even breaks this low right here. So maybe we're just rallying a little bit here, kind of like in this shape, and then boom, this big reaction as a shakeout reaction. It's just so big. So it has to break something. It has to break some parts, of the structure. Okay. So what phase are we in this trading range?
We phase B now. We entered
Mhm.
phase B.
Yeah, so probably it's either a short phase A or maybe even extended phase A. Could we maybe think about where more distinguished parts of the trading range are? So, for instance, I'm looking at um, this area right here. What do you think this is?
That definitely phase B.
There is a lot of buying right here. So this is a
Yeah,
rally that is continuously going up. This is probably the longest duration rally that we could see from the volume signature.
that's right. Yes,
What do you
they
think that
spend
might
a lot
be?
of time.
I'm sorry?
They spend a lot of time in this rally.
In this rally, where in the structure of the trading range we would see that?
Uh, phase B. That's
Maybe we could definitely have some that type of rallies there. Yes, that are maybe rallies on the diminishing volume. I'm seeing increasing volume character here. So demand is increasing initially. So there is some kind of momentum there behind that initial push up. And then
that's
there
good.
is deterioration of the demand. So maybe something stronger than phase B rally. What would that be?
That could be phase D.
Phase D. So yeah, so we have those two options. Either, and some of you are saying here, rally in phase B into the upthrust action. It could be, or it could be phase D. So maybe something where we are overachieving, overcoming, some level of the resistance. So maybe either this one or this one or this one right here. Before phase D, so let's just put alternatives here. Sign of strength in phase D or upthrust action in B. Okay, could this be then what? Could this be phase C?
That could be yes, phase T, phase C. Yes.
C or still B? I think there is a legitimate question here from Scott. Uh, could the second point of fear be so fast right here? So let's just kind of draw everything. So we would go up from here, we would test, we would go up again, and then on diminishing supply character, we're still going down, but not as aggressively. So something like this, attempt to go up, this,
Yeah.
this, attempt to go up, and then we just kind of going up from here. And I think that we are too weak for the structure a little bit. It feels like it should be a little bit more elevated. We definitely break in. I'm just going to do this. On this rally, we're breaking through this level. Then we're reacting to this level, and then we're still going up, even on diminishing demand character, but obviously with less momentum. So momentum is diminishing here. And then we have that reaction. So is this enough, let's say, for phase C, right? So B seems to be okay here. It's the largest among A, B, and C. So I think that maybe this is C. I'm also thinking that there might be a possibility that C could be here because there is some kind of like increase in the supply and it's consistent. So we'll have to see. Okay, well, anyway, this looks here as a potential just change of behavior. So let's just say that we've got here some change of behavior, reaction, then rally that is, Tarek, we're doing what right here relative to the supply?
Rallying in low demand, that's mean in low supply.
Mm-hmm.
Supply has been absorbed, and we are rallying on less effort.
Yeah. Okay, so probably a lower high here. Yeah, and now I'm thinking, is this phase C? This is very aggressive right here. But this could be a phase C of the new range right here. Okay, so kind of like a trading range on the trading range. Okay, so if this is a change of behavior, well, let's just go with this and then we'll just go through the mistakes if we make those. Okay, so then we're going down, probably up thrust, going down, and then again the rally that is not that strong, but still a rally. And then we are definitely having a lot of supply. So where would we go here, Tarek? Where would you think?
We're gonna go for the previous resistance.
Yeah, something like this. Some
That
kind
could
of
be,
stopping action here. So maybe this is phase C of that second trading range. And I think I'm
yeah.
kind of leading you in the wrong direction here. It just feels wrong. Okay. Then we have, what is this?
Demand is coming.
So some kind of strong rally. Could it be phase D rally here, overcoming again the high? Change of behavior again?
That could be the breaking out of this cluster zone.
Mm-hmm.
Previous high, overcoming the previous high needs some power.
Mm-hmm. Rally again, probably overcoming again, small reaction, and then this is more like a trending environment
Yeah.
where we just going up, up, down, and up again, something like this. What I'm thinking, guys, here is that this part of the structure should be elevated a little bit. Just because all of these spikes, they're almost like local spikes. Yes, they do occur, but they don't necessarily, except for this big bar right here. Everything else is more of like attempts and no follow through to the downside. So I'm thinking that this part should be a little bit elevated, but let's just see. I'm really curious how we did because I feel, Tarek, that I kind of maybe misled you a little bit on some of the stuff.
Okay.
Let's see. Okay. Actually, no, we only need this. Okay.
Oh,
Close. I think
that's
we are
close.
close.
Yes, I was doubting, especially at October 16th,
Uh-huh. Well, we'll
but
definitely go for that. Uh-huh.
I see that a lot. Sometime in the backing up action, it becomes like a trading range, above the trading range, with
Okay, so let's
sometime.
yeah, let's tell me again. Hold on, I was distracted with this, so let me take another color. Okay, so what was the question? Number 16?
No, October 16th. That's no, in 2016.
Uh-huh.
That was a major backing up action, right?
You
Yes, yes,
mean this, right?
yeah.
Yeah, major backup action. Yeah.
We have double trading range, one above each other.
Mm-hmm.
Sometime in the top trading range, in the backing up action, we see some kind of switching volumes that is greater than the previous trading range. We
Switching
see
volumes. Mm-hmm.
huge volume spikes happens in the backing up action.
Okay, which columns? Right here?
In this area, yes.
Yes. Okay. Yeah, let's definitely come back to this because just looking at this, I think this is where the majority of the mistakes are. But let's just start from the beginning and, again, what we're trying to do, guys, is not just to analyze, but we are definitely trying to understand where do we make mistakes, right? So we're trying to figure out how we could um, eliminate those mistakes as well. So stop in action was very clear and well defined. Then we know that we're going to be in some kind of automatic rally mode. And then we're seeing this volume signature. So this supply is diminishing, but it's consistent. So it only would mean that there is a secondary test somewhere here. So here's this test, initial test. So here it is. So we need to have some kind of reaction into this test. So here is this reaction. And before that, we're just going up, and probably the automatic rally would come into the higher part of the capitulation bar. It actually, we are making a mistake. It actually overcomes and comes even higher right here. And that's why I felt like the whole structure should be more elevated. Um,
Mhm.
it just, the test was so successful. The volume signature was relatively lower by, a factor of 2 on that test. So usually that would tell you that demand is actually, capable of pushing up a little bit more. So it was a mistake. Then the next push up, 2 legs up. I think that we're not showing overextension right away, so also a little bit of a mistake. Then a
Yeah, we did
reaction.
say that we will go for an upthrust.
Say again?
We did say that we're gonna go for an upthrust. Yes.
Yes, yeah, for sure. I'm just
Yeah.
talking about this area right here, here and here.
Yes.
So overcomes right away. And then, the price comes back to this area. So this is great. And then we said that we're going to have the largest bar, and that was actually my call. Well, yeah, it does go a little bit below it, right? So a little bit below it.
Yeah,
So
this
go ahead.
is very strong bar.
Yeah. So it had
Yeah.
to break something. That was the logic. That intense volume signature, intense volume spike should be able to break something. And then the test right away. So, and we're seeing again how the test is so low. It's almost like the same as here, right? So now we know that the test is successful. Then from there, a rally of what kind? That is going to be a little bit weaker, not going to overcome specific resistance. But I think that, it shouldn't have overcome this resistance, right? So, and I was thinking about more about this bar, this big bar. So that's a mistake as well. Then the price is going down. We put it a little bit too much, but we're recognizing here in the diminishing supply spikes, we know that supply is going down. So we know that this reaction, it is going down, but it has some kind of this shortening of the thrust character where the last two legs are diminishing in the result. And then from there, I think this was a really good call. Phase C was defined by the actual phase D rally, which is a sign of strength rally. It's just too consistent. It has the highest demand throughout this whole structure. And it, again, it's consistent. So it should overcome a significant level of resistance. So something like this, right? And then we're seeing how initially there is an absorption. There are volume spikes right here. So you expect more of the momentum signature, and then you expect less of the momentum deterioration on the way up. And I think we kind of see this, maybe not as visible here, but this spread is definitely diminishing over what we see here. So then after that, some kind of change of behavior just because the volume signature of supply is increasing. So a change of behavior comes after a sign of strength rally. So this means that most likely we are going to go into some kind of trading range again. So here is your trading range, here is your change of behavior. And then within this trading range, this is very tricky. I thought the first range was much easier than the second. The spike here suggests that we are not, we are reaching the resistance here. So the rally should come to the resistance point. And then sudden reaction, continuation of the rally, but weak rally. So if we are reacting, then we are overcoming the resistance, but in a weaker way. So some kind of upthrusts. And then after that, the reaction that develops slowly first. So the volume signature, when you see this type of volume signature, it starts a little bit, then it's kind of inactive. So this, yeah, the spread is very small. Yes, Tarek.
Yeah, there's constant pressure.
Yes, so like it's like a water drop, and it starts a little bit with the increased supply, it dries out after that, and then it goes into the climactic action at the end. So that's the constitution of the downswing here. So you start thinking that maybe there is a down bar which expands first, then there is diminishing bar, and then there is some kind of conclusion with the big bar to the downside. So that's kind of like the zones here. Okay. And then we're seeing a sign of strength. Again, it's very similar in the signature as before. It's just more condensed, where demand is increasing relative to what we've seen in the trading range. So, and that suggests an attempt to overcome the resistance. I don't think that we do. Yeah, so we are more like upthrusting here. So that's definitely, well, this would be an upthrust, but we put it as a major sign of strength. And then we definitely, this is the biggest mistake right here. This is two of the aggressive supply, for this signature. We can't really compare this volume signature to this because this is more of the climactic stopping action. So this is much stronger than this reaction. So we should have guessed that if this was the reaction here, at least at the minimum it would be that, and then a little bit more, and then to go from here. Okay, well, this was a tough one. And then this is an yeah, Tariq.
Yeah, the time was so limited that second rally. We thought this is a back and up action because of the time spent there is not that relevant. It's only 4 bars that conclude the back and up action.
Yes, very quick. Okay, so this seems to be like a trending environment. Why is that? This is where demand is lower because it consumed the supply. Absorption has happened in this area right here. So demand is naturally going to be lower, and supply is going to be lower because throughout the trading range, supply has been absorbed and it's exhausted. And we kind of seen more of the consistency of the rally rather than consistency of the reactions. So this tells us that this is an upward movement and most likely an uptrend, which should be overcoming this this trading range. Okay, well, I think maybe like what would we give ourselves, Derek? Maybe like 80 out of 100, something like this, 85?
Yes, 60, 65 is good.
Okay, I'll take that. I thought maybe we did a little bit better, but you know, this definitely
Actually,
was a big mistake right here. But you know, I think it also was very, very tricky, to be frank. Yeah.
but I think the most
Mhm.
important thing that we did uh, know the bias was up.
Yes, I mean, the idea that this was a reaccumulation, and thank you for reminding us, Derek, about this. Yeah, comes from the flashcard idea that the volume is diminishing. Also, I think this was a very telling rally. Like, this would not be the rally in the downtrend. It would not be the rally in the, let's say, some kind of distribution. So this rally should take us out somewhere. Also, if this whatever comes before a rally, we're seeing supply increase and supply decrease. So again, this whole area becomes more of like the selling has increased, maybe on some profit taking, then the selling has decreased, and then we have the rally that takes us out of the trading range. Um, this was also a little bit telling, but much harder because of the more compressed look. And also, I thought that this was very telling. Once we see the element of the uptrend, then you kind of back engineer and you think, okay, yeah, definitely a reaccumulation. And I thought that also just a trading range idea also was a very good idea from the beginning. All right. Well,
Can I ask a question?
yes, absolutely. And you guys, if you have any questions, this would be a good time to write it down. Okay, Tarek?
If it is not relevant, just ignore it. Would you buy this bar? I think the highest is spiking red bar. Is
This
it
one right
point of
here?
entry? Yeah,
I don't think
I'll be.
so. I mean, I think that we definitely would be thinking that this is a bullish bar, right? Why? Because,
Yes.
and if we see it happening, right, how would we interpret this bar? We would say that the downward effort is increasing a lot. What is the result to the downward, to the downside, Tarek?
Almost nothing. يعني.
Yeah, we
The,
are not coming
very
in
sharp.
below the support, and the close is above the previous
Yes.
low. So we would say that the result is very mediocre on the very big increase in effort, which indicates what? That the demand is present.
Yes.
And when demand is present and the result is producing more bullish result, then we probably would be thinking that this is a bullish bar. But would we be buying it? I doubt that I would buy it myself. I think it's a little bit too aggressive for me because supply is still increasing. So therefore, I would be waiting for some kind of test. And you have two types of tests here. One is more local test, and one is more of kind of like this backing up type of test. So both areas right here, I think, would be great to buy. What else is buyable here, by the way, on the chart? So as we go through the second consolidate, well, actually, this bar is buyable, this bar is
Yeah.
buyable, this bar is buyable. So all of that, I think, we have to buy. Then in the second trading range, I think I would be drawn to all of this. Then would
How
suffer.
would you react?
Mhm.
Yes. How would you react to the big shake downward move next to it?
Yeah, I think this is going to be very difficult to go through, like emotionally. Um, I think this is
If
even,
you
say again?
if you reach the second spring, all of your position will be either break even or at
Yeah,
risk. It's like a very
so
good situation.
I actually would not be out of this position, and here's the reason why. Lately, my stop losses changed a little bit, and I'm gonna give you this material, guys, so don't worry. But let's say if we are experiencing the spring rate here, I don't want to put necessarily the stop loss right below it. So what I started doing lately is I'm defining this as the support level number one. My second support level, because we want to be two supports level away, I'm looking into the area of the uptrend and I'm trying to understand where the breakout has happened around this spring or around, let's say, this formation. And it seems like it's this area right here. So I would put my second support area right
High.
below this breakout out of this pattern. So this is where the major demand has come in. So if the price goes there, if it's bullish, it should find the support really quickly. So lately, this is what I've been doing, guys, and it actually works much better. So your first support level here, your second support level to the left, where the uptrend is breaking out. And if you put it right there, you are protecting yourself a little bit more. So what else would be viable here? We would not get out of the position. I think after this supply, even though it goes down, I would want to see some kind of test. So after this test, maybe somewhere here, this is definitely all of it is viable. Again, viable, and kind of accumulating on the way up as we go up. So those would be my buy points. Okay, Tarek, any other questions?
Thank you very much.
All right, sounds great. Well, thank you so much.
Thank you.
Okay, I see maybe one more question. Is the large volume bar on March 2016 a significant bullish bar? So we're talking about this bar, Gary, right? I think it's the second bar. It's not the first one. So I would be interpreting this bar with such a small spread as supply is coming in and then demand is coming in at the same time and it overwhelms supply. And because of that, the volume signature is spiking. I would be probably only be thinking about it that way. But in a way, I like how the spread on those two significant bars is increasing because, not increasing, but low, meaning that there is some kind of ease of movement going on with these two bars. So I think that this pattern right here looks bullish, especially on the background of the diminishing spread to the downside. Okay, another question. I have a question on the October 13th up bar. Okay, so probably this one. Let me see. Phase D bar. That seems like a potential bearish bar to me. Doesn't set a higher high and has large stop in action, yet it leads to the breakout. Would that bar be concerning when we see it? Or is it that shallow pullback that confirms its bullishness? From Joe. Are we talking about this bar, Joe, right? Just to make sure. I think we are, right? Next bar. You mean the red bar? Oh, the next up bar. Okay. This one right here. Oh, this one, the big volume bar. Okay, right here. Yes. Okay. Yeah. Well, let's kind of go through this a little bit. So let's look at this bar first. So here's the volume signature. So volume is spiking. So we know that behind that there is increase of the supply. And we see that from the tail as well. So intention of this bar was to overcome this level, and it only touches it. And sometimes we would have those type of bars where the first time we just touch. So it's like this up thrust probe that Gary Fullett always talks about, right? The key here in this bar is to understand that still result-wise, we have overcome so many closes. At this close, we've overcome 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 14 closes we've overcome with one bar. We are most definitely going to have some kind of supply signatures because we've stopped 3 times before. So, but still, on the background of that supply coming in, we're still producing a lot of positive result. The next bar is a test bar, which reminds me of today's silver bar, where yesterday we had that significant bar, and then today we had this quite substantial test bar into the body of the significant bar, but yet it didn't really commit to the downside. Then stop in action, absorption, then more of the overcoming this previous close, so confirming bullishness. And then this is the bar that Joe was talking about, this big volume spike. So again, volume spike, automatically, we will be thinking that supply is coming in, supply is increasing. So what do we do with this bar? I like that it overcomes ever slightly this level, but it still stops at this resistance level. It's a very natural place for us to encounter emergence of the supply, increase of the supply. We need to see what kind of downward result we're going to have afterwards. And that will give us an indication of the ability of the supply to push the price down. So what kind of result do we have after that? Effort is decreasing, supply is decreasing, and this is a very small, negligent reaction. So what does it mean in terms of the supply occurring and then does not producing anything? Demand was there too, observed the supply at that level, and that's where we are, right? So nothing else here. Okay. Any other questions? Okay. All right, let's go to the next exercise. So now we're going to look at this exercise in a different way. I'm giving you here the price action, and you need to figure out what is the volume signature throughout the rest of the chart. So a volunteer, another volunteer, say yes. I'll unmute you. And together we'll go through the exercise. No volunteers? Okay, I can do it myself. Let's do it together. I will be asking you questions. You can write down your answers. All right, so where would you say is the most volatile area on this price chart is? From September to December, October, last 3 months, October, last section near the end. Yeah, so most definitely, we see how volatility here has increased so much. So we definitely know that there will be some kind of increase in the volume signature here. Are there any other areas where you would see an increase in the volume signature? November, December. Yes. So we're seeing again increase in volatility, right? So that increase in volatility most likely will have some kind of increased volume signature. Okay, so and what is happening in between? What do you guys think is happening in between? Uptrend, okay. But in terms of the volume signature, so low volume, consistent volume, ease of movement, diminishing volume, low volume. Okay. Yeah, we probably have some pockets here, right? Where, let's say, different textures. So, for instance, maybe this part of the uptrend, this part of the uptrend, and then this part of the uptrend. Hold on a second, guys. All right. So we should note that, let's say, in this first part, what kind of demand signature would we be expecting to see here? Spikes in volume, higher demand. Okay, and why would we be seeing higher demand or increase in demand? Why do you think, guys? Breaking out of the consolidation on the sign of strength rally, last point of support. Okay, yeah, so all of those breakouts after potential phase C, like for instance, a bar like this, bars like this, those even this bar right here or these bars, all of them are going to have some kind of volume spikes where there is some aggressive demand increase signature is present to push the price out of the trading range. Also, this will be a volume spike as well, right? So this is very evident to us. Maybe here, even on the test, we might have some increase of the demand. Here and here, those could be volume spikes as well. Okay, and then we go into this area right here. What could we say about the momentum here? Decreasing. So the volume should do what? The volume should go down, should decrease. Yeah, so let's just indicate that like this. Then we have in the second stage, and I think Franz has mentioned here 3 stages of the uptrend. So momentum stage, vertical absorption stage, and speculation stage. So in the vertical absorption, we're going to have those reactions where we're going to see the increases of the supply. And specifically, these 2 reactions are going to see those increases of the supply. So 1 and 2. So what happens in between with the volume signature? What do you think? Diminishing volume signature. Okay, yeah. I would say that diminishing volume signature with some local spikes on both supply and demand, on bars like this. So something like stable, 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 stable. And then you have one spike, second spike, demand spike, supply spike, supply spike, climactic spike, something like this. Okay, and then going into the last move. The last move also has 3 moves, right? So momentum, vertical absorption, and then speculation. So 1, 2, 3. So how would we, where do you think is the largest volume on this last leg up? in the speculation at the end on the buying climax speculation. Yes, so somewhere here, especially this last two bars. So let's just say buying climax increase in the demand. Okay, and then we probably have some at the beginning, and then volume signature deteriorates, maybe a slight spikes on the reactions, so something like this. Okay, then what happens in this area on the change of behavior here? Higher volume. Okay, yeah, I would concur with that. Definitely some increase in the supply signature. And then this demand is going to do what? Weaker demand. Yeah, so maybe like some local spike like into this bar or into this bar, but then everything else is diminishing. So demand is deteriorating. Okay, then the most obvious thing, what happens here? Higher supply signature, yes. So increase in volume for sure. And it's just like one of the highest volume signatures on the chart. What do you think about the rally, the next rally? Would that be something that you would say that still the volume is going to be high? Not much volume, rally on exhaustion, big spike, weaker volume, not as high. I would say that probably we're talking about lower volume than on the decline, on the initial decline. The first bar is probably still pretty high in the demand right here. And then it just starts to go down, something like that. And then we have this area right here. So what do you think happens with the volume on the next leg down? Is it going to be larger than the first one? Climactic increase in volumes, yes, larger, much larger. My only concern is that except for this bar right here, which is compared to the stop in action bar right there, we don't have that type of big supply bars to the downside. So I think that this bar definitely deserves a spike, but probably the rest is relatively high, but not as high as initial drop to the downside, except for this one bar. And then off there, what do you think happens next? Ease of movement on the upside. No, down. Okay, yeah. So ease of movement. So in the volume signature like that. Okay. And then on the upside, what do you guys think? Diminishing volume, starts strong, ends weak. Yeah, probably something like this, where we might have more volume signature here, and then it kind of starts to deteriorate a little bit. There might be some spikes like on this bar right here, on this bar. Those are like supply that is coming in. Okay, let's think what else are we missing. So definitely diminish volume here, diminish volume here. So this one is going to be a little bit trickier. So, and then increase volume spike, decrease. Okay, something like this. Okay. All right. Well, let's see. For some reason, I'm not feeling very confident today with this exercise. So we'll have to see how we do. Excuse me. Okay. Yeah, I think this is where we start. Okay, well, let's go through that. Let me take another color and let's post-analyze our analysis. So we said that the first, the biggest volume signatures are going to come in two areas, this one and this one. We see this from the volatility of the price. So this was good. And let me just go to the big screen. Okay. All right, then secondly, let's start from the left, right? From the left. So we said this type of bars are going to produce some local volume spikes on one side or another of the reaction. We're going to have most definitely big spikes here on the bar like this because this is going to be a big recovery. We said that in between there's going to be diminished volume character, so this was good. This one was a little bit tricky because right here on the test you still have a lot of volume, so here it is, but then we said that it's going to diminish and then go increase into the last two bars, so here's this increase. Then we said that here we're going to have the volume signature diminish volume on the test, and then again the spike. So I think that there is a mistake here, or at least we maybe have not talked about the differences between the volume spikes on these two lows. So I think naturally we would be inclined to say that the volume is going to be high on the first one than on the second one for multiple reasons. The first one is that the downward spread and then subsequent up move, the downward spread and subsequent up move compared, we probably would be thinking that the volume and the supply and the demand are much, much stronger here. And that's not the case. So, I mean, it's really hard to really, kind of guess this way. But I think that just understanding that this type of action and this type of action will produce that volume supply spike is, sufficient for us. Okay, diminished volume character, yes. Another mini spike, well, kind of, yes. Then we don't have anything here. And then we said that this is going to be attributed to the increase in the demand. And we see that, so that's great. Then we said this is going to be a loss of the momentum, so the volume is going to go down. We're going to have a little bit more volume going into this reaction, so here it is. Then we're going to have a more stable volume signature until this reaction. And then in between those, we're going to have spikes on the breakouts at some stopping action places. So something like this. And some of them are correct, some of them incorrect. So we kind of have to make that judgment. Yeah, okay. So, but I think that just generally we've defined this correctly. Like a trending environment with volume spikes either on the breakouts or at the stopping actions. Then this most definitely was not as pronounced for the volume signature. So that's probably a second mistake right here. Then we said that there's going to be some deterioration of the demand or just consistent demand, nothing like of a big expansion characteristics. And then the move is going to conclude with these two bars having the buying climax volume signature. The next bars are going to be still high just because the change of character comes in the more of the distributional manner. So we definitely will have the increase of the supply there. Demand should start decreasing, on the rally. This should be the highest spike, the stop in action. I wouldn't say that the demand is decreasing too much. To me, this looks more like increased in the effort and then limited result to the upside. So this is probably more appropriate for this rally. So maybe another mistake. Then definitely an increase in the volume signature. My thinking was that we actually gonna, well, we said that we're gonna have the higher volume signature than here for sure. But I thought that this would be the highest, like this bar right here, because what happens on the first initial break to the downside is that we have increased supply, but we also have increased demand. And the reason why we have an increased demand, because for the first time, we see that weekends are seeing value, and they are coming in with a lot of confidence because it's not that far away from the uptrend. Here, they have less confidence because they already seen the break to the downside. But it's obviously different. At least we said that this bar here is going to have the highest volume spike, so this is great. Okay, so spiking around and demand signature at the beginning of the move, and then we said that demand is going to go down. Okay, so what do you think, guys? How did we do, and what are the questions and what are the comments? I did seeing better the price and extracting the volume that I did see the volume and extracting the price in the first exercise. So that's interesting, Franz. Okay, so seeing the volume signature, and I would say that, yeah, probably it's easier to think about the volume signature based on the price than thinking about the price based on the volume signature. So that other first exercise is definitely is more challenging and maybe even more valuable than this. But still, the reason why I'm giving you both is kind of have the feel for both, right? So you should be able at this level to extract data about the price from volume and about volume from price. Why is this important? Because when you look at the construction of the spread, and you understand where in the context, let's say, of a trading range or an uptrend, that spread occurs, you could think about the forces that are behind the volume signature on that bar. So what is happening, let's say, on a bar like this one or this one? It's a stopping action. So a stopping action would be associated with the presence of both forces, with both increase of the supply and increase of the demand. If that is happening, then the overall volume signature is increasing. And then we could go into more of the analytical deductions here. If this is happening, then most definitely we might be in the area of the reversal. That's number one. Then we are most definitely looking for some kind of confirmation of the resolution of the price action. And we might also have some kind of testing that should come later on. So it just helps you with kind of like developing a correct thinking about your analysis, just in general. This is a very easy exercise. You don't have to not to look at the chart. You could, kind of like take the chart, crop out, let's say, volume signature, and you will not remember this. It's really hard to remember all of the data points if you just glance at the chart. The main exercise is just to be methodical about thinking what kind of volume we're going to have because of the environment, because of the spread, because of the structural context, and so on and so forth. And then do the comparative analysis between price action and, let's say, identify specific volume signature and vice versa. So in that way, it's a very useful exercise. Okay, I think that's it. That's all what we have for today. Why don't we do this? Why don't we see if we have any questions just to finish up the class into 5:30? And if we don't, we're just gonna stop here. So let's just go through the homework. Just want to make sure that you have this. Oh, I'm sorry. Here are two questions. Yeah, Alex, thank you. So two questions. One is from Alex. What would be the best way to learn, considering that someone is willing to spend 10.5 hours a day trying to master the markets? I guess it would be day trading, but how can we extract all of the knowledge from there? I started to try it this month and I find myself looking at the screen passively, losing my focus from time to time. Therefore, even if quantitative approach is correct, qualitative looks not ideal. This is a great question, and I apologize that we kind of skipped it. And also, Hannah, a student in this class as well, had somewhat of a similar question, or I had somewhat of a similar conversation with her via email. How do we, during this semester, how could we extract the most value? I mean, obviously, just come into this class, especially if you're 9 to 5 job. It's really hard to, after a full day of work, being exhausted, maybe coming to a family with other responsibilities, to devote some time to practice. So if you devote your practice time just to being here in the live class or just to watching the recording, let's say over the weekend, that's your time. You should be able to have that time and nobody disturb you, and you just have to go through that and just concentrate on the class. So that's number one. Secondly, let's say that we are in the wonderful position where we could, for the whole day, like Alex, spend on our trading development. So what would I do? And I've been in the places where I was both. I had that type of 10 to 12-hour days where I was just following the charts, and that was early on in my career. This is where I still did not have the skill. I was developing the skill. I didn't have necessarily a job in the financial industry, so that allowed me to be kind of like on my own, trade and study. So this is a wonderful time because you are not responsible for other things, and you can do this. So that's great. So let's talk about this. So you mentioned in trading itself, and I would say that yes, for sure, do trading if you have so much time. If you can't do intraday trading, that's great. I would say that intraday to maybe like a swing time frame, those would be the best for you to look, because here you're having a number of trades, which is great. And here you have fewer trades, but they are in a different time frame. So it kind of helps you to have both. If you have time, you could do this and that. I mean, the key there is not to lose your capital. So what you want to do is to establish the practice of starting your trading with the smaller amounts and then increasing those amounts at the certain milestones. So for instance, you could say my milestone where I'm going to increase my position size is going to be reaching the plateau of where I'm 50% right on all of my trades. Or it could be, or if I'm making an X amount of money per month, that could be a milestone. Okay, secondly, and more importantly, I would say that simulated trades is the way to go. So those are the trades where you use historical data. And you take your setup and you basically go bar by bar and you simulate trading and you record all of your trades and you do your post analysis of trades. So in here also with your actual trading, you always do post analysis. So why is that second step is so important? Because the first one might lead you to what? It might lead you to this looking at the screen passively and losing my focus from time to time. It's just, first of all, it's very boring just to look at the screen and to just like watch the price action unfold. It's very unconscious. So at least if you're going to do that, then in your journal, comment on each 5-minute bar. At least do that, right? So the bar ends, you go to the journal, you write it down. That would be more productive passive screening than, just looking at the screen. But the most valuable exercise in your trading is still going to be your post analysis. The most valuable exercise in general is going to be simulation of your trades based on your setup, on the historical data, bar by bar, doing the post analysis of your simulated trades as well. So that way, imagine if you're intraday trading, you might have, let's say, I'm going to just be very conservative. My intraday trading is all based on, I want to extract from the price action of the day 2 to 3 best moves. I know that this is probably not as active as you guys would want to be. So I would say that anything between 3 to 5 trades per day, that could be the goal for you. So then you might have some swing trades, and those could be, let's say if you are a short-term swing trader. So this means 2 to 10 days, something like that. Then you most likely per month, you're probably gonna have maybe between 10 to 20 trades. Let's just say 15. So this way, so this is per month. So this is per day. Okay, so let's just say 3 per day, the more conservative number. And let's just say that you trade 4 days a week, not 5. So then you're gonna have here 16, 17, 18 days, about 17, 18 days at 3 trades per day. So this is gonna be about 55 trades plus 15. So you're gonna have 70 trades per month. Okay, so this 70 trades needs to be post-analyzed back and forth, horizontally and vertically, up and down, like from each angle. That's your job. If you have 10 hours per day, this is what you're doing. You're not doing anything else. You're not looking at the screen passively, and you're not just trading. If you're just trading and you have so much time, you're wasting time. So doing 70 trades and then doing post analysis of those 70 trades, mandatory, required. Okay, so then on the top of that, you study. And your studies, depending on your level, right? So beginners, you're still reading a lot of text, watching a lot of videos, attending classes, right? So then intermediate traders are going to start shifting more. They're going to specialize in their reading or what they watch. So they're going to be reading something on the specific subject. They're going to be watching something on the specific pattern. They will not be reading generally anymore. And majority of the time is going to be spent on charts plus simulation. The advanced trader does not read because everything has been read, everything has been talked about, everything has been heard. And now the key is from knowledge to skill to process and then to mindset to work more on the last 3. So you're doing a lot of simulation, you're doing a lot of process-oriented activities, and you're starting to explore your mindset, as a person, as a trader. So again, depending on where you are, that 10 hours could be distributed in a different way. So that's what I would do. And again, to me, even like out of all of these activities, what would be the most valuable? Let's say that we could do only one. Could we trade? Could we simulate trading? And could we study? I think, again, depending on the level, if you're the beginner, I would concentrate on your studies. If I am an intermediate trader, I would be concentrating on simulation of trading. And if I am more advanced, then I would be concentrating on trading and post-analysis of trading. Okay, Alex, what do you think? Does that make sense? And what do you see for yourself also? You know, in terms of how would you want to establish your routine, your daily routine with this 10 hours? Can we talk about this? Maybe you can write an email, you know, like what you decided to do so that we would have some kind of accountability as a group next class. Yeah? Okay, great. Perfect. Okay, and guys, I want you also to think about this. So you have to start with which level I'm on right now. Am I beginner, intermediate, or advanced trader? How much time do I have to devote each day to trading or each weekend, let's say? And what is the most priority for me to do? Also, you know, and then you kind of define what you want to do. I also want to say I was talking to Hannah, and I was asking her what was her process, daily process, and you know, do you do some practice? And Hannah was talking about forward trading, meaning forward simulation. So it's opening the position with the current market. I think it's a valuable exercise. Please add post analysis to this. You know, once the trade is done, post trade analyze that for sure. But I would also recommend adding to that simulation as an added exercise based on the historical data. Why is this important? Think about any type of sport. Think about any type of craft that requires, you know, development of your skills. You can only do this through repetition. You have to repeat it many, many times, and you have to repeat it with some kind of feedback so that it would be a qualitative way of repeating this task. The same with trading. The more you repeat, the more your mind sees the pattern. And during the actual trading, when you're going to see the same type of pattern, your mind is going to be accepting the reality more. A lot of traders would come to me and they would say, "Well, simulation is now not good. Why? Because you don't have emotions associated with that particular trade." And I would agree, emotions are not going to be the same. But at the same time, come back and think about how people are developing their crafts. For instance, my favorite analogy is with sports, with basketball, with my beloved Golden State Warriors, and specifically with Stephen Curry. So he's shooting 3-pointers during practice, you know, making, let's say, 100 plus in a row. And then he comes to the game. And because of that practice, he feels more confident and he is more technically sound when he executes his shots. And of course, there is more emotionality during the game. But if you would be thinking about the mechanics of how to shoot that 3-pointer, you know, on the top of the emotions that you have in the defense, you are going to lose. So the same with trading. We want to eliminate a lot of the mechanical kind of unnecessary things that we could practice outside of trading hours. That's what's important. And if we, you know, could reach that level of efficiency in our analysis, and it's a never-ending story. I mean, like I practice each day, and I still feel like I'm doing a relatively kind of like good job, but not necessarily the greatest job. It has to be repeated multiple times each day. So repetition is the key. Qualitative repetition is even bigger as the key. Okay, some other questions. Would you mind commenting on the expiration you might set for 2 or 3 week trade on options? If not, if this is off topic, it's probably off topic, Scott. If I would be thinking like my trade is going to be 2 to 3 weeks, but we could definitely talk about this. So I'm thinking about that this is a swing trade. I would usually be thinking that the last months of the option life, this is where there is a big deterioration and decay in the premium. So there is an acceleration of this decay. So I would be thinking, I want to have that month plus those 2 to 3 weeks. So therefore, I'm giving myself the room away from that accelerated decay, and plus, what if this position will require the 4th week to hold? Just technically, right? Or maybe even the 5th week to hold. So it gives me a little bit more time. So I would say like months and a half to 2 months. That would be my option expiration there. Do you want us to send in some of these swing trades for post analysis from Gary? Absolutely. So whatever time frame you're trading, whatever trades you want to choose, whether they are intraday, whether they're swing trading or long-term campaign trades, absolutely. Just show me 6 winning trades in your time frame and 6 losing trades, and kind of like keep a track of showing me one over another. And again, the key to that exercise is just more awareness for yourself. What are the mistakes that I'm making? And then we could talk about how we could correct those. You could come to me in the email and say like, okay, this is my anatomy of the trade for this week. I see this mistake repeating consistently in my trading. How do I deal with this? And then that will be beneficial not just to you, but to the whole group. Okay, one more. Which tools, trading techniques, or materials be best complement to wyckoff trading? Indicators, patterns, shapes. What about best complementary on-demand wyckoff analytics materials too? Okay, great question, Dominic. Thank you. So I would say that again, depending on your level, right? So it's not just such a linear kind of answer. And I think that I should have this on the website somehow. So let me just kind of give you, maybe I'm going to start with some tools. So most definitely we are using relative strength as the tool. We could use some kind of momentum tools as well. So those are going to be your rate of change, MACD, if you want to use that, anything of that kind. Then moving averages of any kinds is good. Any type of linear regression tools are also great. Then some other tools that are more tape reading tools. So for instance, David Wise's Wave. It's a cumulative indicator that shows the cumulative volume for one upswing or for one downswing. So very valuable. You could use also his David Wise. I don't know how he called those. The volume numbers for a swing. So he would have like all of these volume numbers, like looking at the effort, and you could use that for your tape reading. Right away then, in extra material, tape reading itself is very helpful, and especially the series that I have right now on Mondays with William Reardon. And I think for those of you who are attending those, you might concur with me. I think those are brilliant because William is at the very high level reading the chart. So we kind of have a lot of like in-depth conversations about how to read the chart, how to read the tape, and this is a really, really great addition. So I always recommend to our more advanced students, to do that. Secondly, I would say that the wyckoff Trading Progress group, where Franz right now is currently the leader of that group, this is all about the next step for you guys, the process, creating the daily routine, creating the weekly routine, and then creating accountability with your peers as to how you go through the routine on the weekly basis, defining your common mistakes, going into the hot seat, identifying some of the, even emotional issues that are being associated with trading. So that's kind of like a two natural ways, steps for your next development as a trader. What else? Indicators, patterns, shapes, complementary wyckoff training. Definitely would suggest, let's say if you're at the beginner intermediate level, reading Bruce's blogs, all of them. So those are usually very easy to read. Sometimes you can make notes of those, but you could have it as a secondary reading. This is a specialized reading. This is not a general reading. You're reading it with the specific intention. So definitely would do that. David Wise's book on trades about to happen, for sure. And this is at your level, at the intermediate level. So these two are great, books to read. What else? I would say for now, this is it. Maybe I would add here stock charts or any type of software top-down selection approach, just kind of creating that path. And I'm showing this a lot, and together with Bruce we discuss that a lot in the WMD class. So if you want to know what this is, or you remember this from WTC 1, just having that process of how do you go about selection on a weekly basis. I think that the tools that stock charts has, it's kind of very intuitive, going from the top to the down. Okay, I think that's it. Okay. I didn't see any specific course which includes all of those on the Wyckoff Analytics website. Please correct me if I'm wrong. Yeah, so tape reading you can find on our website. The process group is a little bit hidden because we're not advertising this. This is only for the alumni of this course. So once you graduate from this course, you will be eligible to two things. You will be eligible for to watch the special on the process, which we do not sell. We only give it to you guys, and then the group itself. I'm interested in the MACD, for example. Should I be? I think you should be, but you should understand how it works and how it works in wyckoff terms, because once you understand how it works in wyckoff terms, then you will start seeing momentum on the price alone. So it might be even easier if you do that. If no course available, okay. I would say that, Dominic, just kind of like staying and consuming everything that we've produced, and then because we've got so much free material, we've got a lot of material, in different classes, and just practicing. Again, I don't necessarily would recommend anybody from the outside except for somebody who is in our universe, like somebody like Bruce, somebody like William, somebody like Alessio. I mean, like, I know that those are going to be very high quality teachings and information. There are definitely other people out there who I have respect for. I mean, Gary Follett, you have to kind of like be in his presence just to understand how he looks at the chart, and it's sometimes really hard to understand him because of his speech, but and I've heard a lot of comments about that from students, but you could just try just one session or two sessions whenever they come for free and just to decide for yourself to do this or that. I mean, definitely when David was alive, I would definitely recommend David any day. And I spent a year being mentored by him, and we become really close friends. But in absence of him, his book is probably the best voice. There are some videos on YouTube, I believe, that you could find as well. Okay, so maybe one more. Okay, what is your definition of win-loss trade here for the homework? Should be a variance or it's P&L. For example, I may have a good P&L trade, but left a lot on the table. I may not call this a win trade. Wendy, I would say that the win trade is always the trade that makes money for you. And then you make that definition that you have missed the majority of the trade and majority of the profits. So then you could state this as a mistake and you could analyze this. Maybe this is the pattern that repeats itself over and over and over. So making $1 is a winning trade. Making $1 million on a single trade is also a win. But they definitely in a different category. So just think this through. I think that's it. Okay, from Jeremy. Yeah, let's just kind of answer this and then we'll stop. Why are you analyzing the large course building in Russell 2000 and then jumping into S&P sectors and top-down analysis to select individual stocks? And Jeremy, I think I answered you in the email, but let me do this here as well. I watch all the free videos from WTC. Is there overall analysis of S&P, NASDAQ to Russell, just to get a real feel for the health potential direction of the overall market? That's correct. Before going into the S&P stocks for trading. That's correct. And why not Dow Jones or Wilshire total market? Okay, I understand the question. I think Russell 2000 was just interesting most recently with an attempt to break out. I called that breakout. I'm still waiting for that breakout to happen. It's going to take some time, but I think that Russell will overcome that resistance. So there was just concentration on Russell. But usually we look at all four, S&P, NASDAQ, Russell, and the Dow, just to gauge exactly the health of the market and the directionality, the bias. And then after that, we go to sectors, groups, and then stocks. And I don't really know exactly in which indices those stocks are going to be, whether they're going to be in the Dow or whether they're going to be in the S&P or NASDAQ. I'm just, this is kind of a process of the selection that would lead us to stocks level. And this is exactly what we want to do. All right, well, with that, I think we're done for today, guys. Really good class because I feel like we got back to work. Second class, no guests, so I'm really liking that we are in the habit right now of practicing. So each class we're going to have exercises. I'm expecting you to work on your homeworks a lot, so let's just start working. And with that, thank you so much. Have a good week and weekend, and I'll see you in the next session. Thank you, guys. Bye-bye.